Good day everyone and welcome to the premium video newsletter for August 27, 2013. Lots is going on in the market today, lots of volatility and lots of fundamentals, so let's get into it right away. Two economic reports were released before the opening today. The U.S. Consumer Sentiment and the other, Home Price Index. The Conference Board said its Consumer Confidence Index rose to 81.5 in August from 80.3 the month before. Economists had expected 79. The Standard & Poor Case-Shiller 20-City Home Price Index rose 12.1% in June from a year earlier, nearly matching a 7-year high. But month-over-month price gains slowed in most markets, a sign that higher mortgage rates may be weighing on the housing recovery, and we've been discussing that over the last few days. The big news today was Syria. Investors are beginning to get very concerned about the possibility of a U.S.-led military action against the regime of President Bashar Assad, since U.S. Secretary of State John Kerry said Monday that it was undeniable that Syrian government used chemical weapons. Stocks declined broadly this morning as investors feared the possibility of a U.S. military intervention in Syria could become a reality in the very, very near term. The news in regards to Syria was the catalyst that Crude was looking for during the last 2 months of trading. And without this event, which was unforeseeable, I doubt very seriously we would see this rally in the crude market. The next question is, how much momentum does this breakout carry? One clue is the size of the trading range we saw, which was the biggest day range we saw since June 20th of this year. This tells us that there's a strong emotion behind this move, and if we see more clues that US will intervene, we will see this rally move to the 115 area, similarly to what we saw in April and May of 2011. I don't want to go too far beyond that level because we really don't know the extent of the involvement that US will take at this time. And if U.S. troops don't get involved, there's about a 95% chance that we will drop right back to the 102, 104 level in the very short term. Another market that's breaking out for the same reason as oil is the gold market. It's kind of funny, but I think about 1 week ago, I even made a comment while analyzing the gold market that unless we have another war, I doubt that gold will go much higher, or something similar to that. Well, here we are, and any time in the past when there's a threat of war and instability, people tend to take money out of stocks and buy precious metals. It's basic economics, and we're seeing it here. Once again, we're trading at the same price we saw in early June of this year, and if we can break the 1425 area, the odds are very high we will move up to the 1450 to 1470 trading range. But for that to happen, we have to see some evidence that the U.S. is in fact getting involved, because all we have at this time is a possibility. If nothing happens, which is the most likely outcome in this situation, gold will drop to the 1350 to 1300 level fairly quickly. So right now, let's watch the key levels I discussed, and we'll see what happens with Syria next. The bond market continued its rally from yesterday, but today the move was not based on pure technicals. If US goes to war, then the US economy will become uncertain again, and if that's the case, interest rates will not be moving higher. This is very speculative and more likely than not will not happen. But it can, and this is what we're seeing right now. As I anticipated yesterday, the resistance level I was looking at, which is the 126 area, is just a few ticks away from being reached, and I think we would have gone up here with or without Syria. The next stop is the 127 area, and there's a lot of resistance there. If we can go back up to the 127 level, then bonds will be in a range-bound market once again. But if we peak out below the 127 area, we will most likely continue moving lower on the next swing down. Before I move on to the US stock market, I want to touch base on two currencies that I've been following. First, we have the Japanese yen, And a few days ago, I warned you that we may be violating the lower support area that took us a long time to build. And fortunately, I was premature. Since then, yen rallied, and the fear many traders had of breaking the support is no longer there. The move we are seeing is fairly strong, and the next thing I want to see is a higher high in the yen. I want to see if this swing can take us up to the 105 area or close to it. If we don't make it above the old high, which is right about the 104.5 area, we may continue this slow drift till we get stronger economic news out of Japan. Lastly, a few days ago I also discussed the euro, and I wanted to see if the price could remain near the top of the channel or if it would gravitate towards the bottom, similarly to what we saw during the last 6 months. During this time, the euro has been very range bound without much directional bias, and this is the first time we may be breaking out to the upside. If you recall, I stated that if we can maintain the high levels, traders are going to gain confidence in the euro, and the odds of breaking through the highs will be increased. Well, it's been several days now, and prices are gravitating towards the highs, as I was hoping they would. This is telling me that there's strength in the euro right now, and the improvement in European economy so far is being translated into the price of the currency, which is a good sign. Finally, getting to the stock market, most of the trading action we are seeing today is due to the threat we're seeing in Syria. And we broke the 1640 level, which was the short-term support level the market built over the last few weeks. The next level is 1620. And if pressure from Syria stays the same, we will be moving towards that level tomorrow morning. Since we are below the 50-day moving average, fund managers technically cannot get into too much trouble for liquidating. And this is one reason we see weakness across the board. When funds sell shares, they don't liquidate one stock, they sell baskets of stocks and shares simultaneously. This is why we are seeing the selling across all sectors and stocks. Remember what I said a few days ago. The markets cannot have a strong up or a strong down day unless all sectors are cooperating. And this is what we're seeing now. We didn't see this on the way up, as you know, and this is why the rally we saw during the last few days on the way up had a very tight trading range and very little volatility. The strong sell-off had a major impact on the tech sector as well. The Nasdaq broke right through the 3590 area where we saw support being developed during the last few weeks of trading. The next step is to fill the gap between the 3552 and the 3502 level, and it will happen if we continue to see bad news coming out of Syria going into tomorrow. We're still a bit away from the 50-day moving average, so I don't think the sell-off in the Nasdaq is going to be as strong. And if the news from Syria doesn't go anywhere, we may be able to get out of this downswing without breaking the uptrend, which is right at the 50-day moving average as we speak. If we do break below the 50-day moving average in this market, it won't be pretty. But let's keep our fingers crossed and hope the Syria situation improves in the next few days. Today, we had several setups to the downside. This suggests that the sentiment right now is very strongly moving downwards, and the ratio of stocks making highs to lows is skewed to the downside, which is very typical for a broad market. All the setups today are to the downside, and they're all 4x4s. The tickers are MS, WAG, ADBE, and BLK. Place a sell stop 20 ticks below today's low, and if filled, place a buy stop 30 cents above today's high. We have to use higher numbers because volatility is high right now, and we don't want to get a setup triggered due to random market noise. So we're taking extra steps to protect against random entries. Be careful out there during the next few days. There's a lot of volatility which can bring out emotions, and emotions don't mix with trading. Have a great night, everyone, and I'll update you tomorrow.